The market just did something we haven't seen since the last full-blown crypto wipeout. And yet, in the middle of all this panic, three assets, XRP, HBAR, and ETH, are flashing a signal that almost nobody is paying attention to. Prices are collapsing, fear is spiking, liquidation records are breaking, but underneath all that chaos, something huge just flipped. And if you miss this moment, you may regret it for the next 5 years. Let's break it down. If you're interested in this topic, hit the join button, subscribe, and type interested in the comments, and I will give you a heart. The market didn't just dip, it imploded. Bitcoin touched levels nobody expected. This early in the cycle, Ethereum collapsed under that psychological $3,000 0 cents floor. XRP slipped into zones that make new investors panic and old investors smirk. And HBAR, well, HBAR is doing what HBAR always does in a crash. It quietly exposes who understands the game and who's just pretending. Right now, your screen is red, your feed is panicking, liquidations are blowing through the market like a wildfire, and if you're feeling your chest tighten every time you refresh the chart, that just means you're normal. But here's the uncomfortable truth. The people who make the life-changing money in crypto never make it during the green candles. They make it here in the bloodbath, in the fear, in the exhaustion, in the moments everyone else says, I can't take this anymore. That's exactly why this moment matters more than the last 6 months combined. Because while the headlines are screaming crash, something deeper is happening behind the curtain. Call it manipulation, call it coordination, call it whales playing their usual games, but the market is not reacting naturally. Nobody sees a $20,000 0 cents drop in Bitcoin in 2 weeks and says, yeah, that's normal. Nobody watches ETH lose months of progress in 1 weekend and says totally expected. And absolutely nobody watches HBAR and XRP bleed into massive discounts at the exact same time institutions are quietly increasing their positions and thinks it's a coincidence. This is what smart money accumulation looks like. Ugly, violent, exhausting. You're not supposed to feel good during these moments. You're supposed to think. You're supposed to zoom out. You're supposed to ask deeper questions. Like, why are ETF inflows stalling while the assets underneath them are hitting extreme discounts? Why is retail panicking while large accounts are buying volatility instead of fleeing from it? Why are analysts with access to data we don't have suddenly whispering about liquidity injections, rate decisions, and critical market triggers, all pointing to one window? Right now, and most importantly, why are the assets with the strongest fundamentals, strongest ecosystems, and strongest long-term bullish narratives getting discounted the hardest? That's the game they don't tell you about. Want the best returns? Fine. Sit through the worst moments. XRP holders know this chapter too well. XBAR holders have practically taken a PhD course in patience. ETH holders have seen this cycle repeat 4 times already. The market isn't crashing because these projects are weak. The market is crashing because this system needs new liquidity, and the fastest way to get it is simple. Scare people into selling their best assets at the lowest prices. It's cruel, it's obvious, and it works every time. But here's the twist the market never expects. You're not retail anymore. You're informed. You're aware. You're watching this play out with a level of clarity most people won't have until the bounce is already behind them. If this volatility is shaking you, good. It means you're awake. It means you're paying attention. It means you understand that moments like these are rare, uncomfortable, but rare. And the next phase of the cycle doesn't start with confidence, doesn't start with green candles. It doesn't start with good news. It starts exactly here, in chaos, in fear, in uncertainty, in the zone where 90% of investors tap out, and the top 10% quietly position themselves for the reversal. Which side you fall on depends entirely on how you respond right now. Because whether you like XRP, HBAR, ETHBAR, all three, these prices aren't punishment, they're invitations. The question is whether you're ready to see the opportunity buried under the panic before the rest of the world wakes up to what's actually coming. Let's talk about what actually triggered this nuclear level sell-off, because if you only look at the charts, you'll completely miss the story sitting underneath them. This wasn't just fear. This wasn't just panic. This was a perfect storm created by macro pressure, government chaos, ETF reshuffling, liquidation cascades, and retail exhaustion all hitting at the exact same time. That's why the market didn't dip. It collapsed. Bitcoin didn't fall because people stopped believing in it. Ethereum didn't fall because its fundamentals suddenly got weaker. XRP and HBAR didn't fall because utility disappeared. They all fell because liquidity was ripped out of the market at high speed. And when leverage unwinds, the market doesn't walk. It collapses like a building with its foundation yanked out in one violent pull. And that's exactly what we saw this week. Billions wiped out in liquidations, billions in ETF outflows, billions sidelined because investors don't know whether the US government is going to stabilize the economy or break it even more. And right in the middle of this chaos, you've Donald Trump making statements about injecting trillions into the US economy before the year ends, a move that could flip the entire crypto market upside down in seconds. Because if even a fraction of that liquidity hits the market, everything changes instantly. Interest rates, risk appetite, volatility profiles, ETF flows, institutional behavior, all of it shifts. And that's the part most people are missing. This crash didn't happen in a vacuum. It happened right as rumors of massive liquidity injections started circulating among traders and analysts with access to information long before retail gets it. And that's why this crash feels different. It's too deep, too fast, too synchronized, and too perfectly timed. When Bitcoin retraced $20,000 0 cents in 2 weeks, that wasn't traders panicking, that was forced selling, liquidations, margin calls, automated triggers, and whales pushing the price lower to shake people out before any potential macro reset. ETH dropping below $3,000 0 cents wasn't a sign of weakness. It was a liquidity grab, the kind that happens when large players want to load up at prices they will never tell retail to buy at. XRP falling back toward its consolidation range wasn't a death sentence. It was an accumulation zone being revisited because the macro environment demanded volatility. And HBAR dropping under $0.15, that's not a failure. That's a gift. Because unlike most altcoins bleeding right now, HBAR is dropping while its ecosystem is expanding. Tokenization standards integrating. Africa launching new tokenization labs built directly on Hedera. Institutions experimenting with real-world asset issuance. Enterprise partnerships increasing, and yet retail is so overwhelmed by red candles that they can't see the disconnect between price action and fundamentals. But here's the truth. Markets bottom exactly when the disconnect becomes unbearable, when price no longer reflects reality, when fear becomes so loud that logic gets buried. And we're in that zone right now, the zone where the narratives start splitting. On one side, you have retail saying everything is collapsing. On the other side, you have analysts quietly saying liquidity's coming. On one side, influencers screaming, don't buy anything. On the other side, whales silently absorbing every liquidation wick. On one side, the fear and greed index flashing extreme fear. On the other side, smart money accumulation metrics flashing opportunity. And this is where you have to choose which voice you listen to. Because if Trump injects trillions into the market, even temporarily, you will not get this pricing ever again. XRP at $2.11 will not stay there. BET under $3,000 0 cents will not stay there. HBAR under $0.15 will not stay there. Bitcoin in the low $90 0 cents K range will not stay there. And the moment the injection hits, the reversal won't be gentle. It won't be slow. It won't be gradual recovery. It will be violent, fast, and merciless. The same way this crash has been. That's why part of you feels uneasy right now. Not because you think everything is over, but because something in you knows this moment is temporary. You can feel it. The volatility, the fear, the uncertainty. These are signals the market always gives before a major shift. The question is whether the shift goes up or down. And based on everything happening behind the scenes, the last thing you should be doing is assuming the worst. Because the same people crashing this market are positioning themselves for what comes next. Now let's zoom out and look at the bigger picture, because if you only stare at daily candles, you'll think the world is ending. But if you pay attention to the underlying behavior, something very different is happening right now. Every time the market experiences a crash of this magnitude, fear index at extreme lows, liquidations wiping out billions, altcoins bleeding in double digits, Bitcoin losing $20,000 0 cents in 2 weeks, the same pattern repeats. Retail panics, whales get greedy, and institutions get silent. That silence is important. Institutions don't scream by the dip. They don't brag about their accumulation. They don't show emotion, but they always act early. So when you see massive ETF outflows, but you don't see those same institutions selling their actual underlying assets, that tells you something. When you see Bitcoin dropping into zones where miners start accumulating instead of selling, that tells you something. When you see Ethereum falling under $3,000 a cent, a level that historically triggers large inflows every single cycle, that tells you something. When HBAR drops below $0.15, right as enterprise adoption hits a new high and tokenization standards expand, that tells you something. And when XRP retraces into levels where long-term holders historically add heavily, guess what? That tells you something too. This is not a collapse, this is a reset. A controlled demolition of over-leveraged positions happening right before potential liquidity injections, regulatory decisions, and macro pivots. But here's the part that nobody wants to hear. The market always behaves this way before major upside. Always. Right before every major rally, you get the same ingredients: fear, volatility, confusion, contradictory signals, macro pressure, and silence from the big players. That silence is not random, it's strategic, and if you pay close attention, you'll notice something else. Every single major influencer, analyst, and insider calling for massive market reversals right now has one thing in common. They're seeing data retail doesn't see yet. Whale wallet activity, exchange flows, derivatives positioning, bond yields, liquidity modeling, government policy timing, ETF behavior. When you put all of that together, the story changes drastically. We're not looking at the end of a cycle. We're looking at compression before expansion, pressure before release, fear before reversal. Retail calls it chaos. Smart money calls it a setup. And the setup is almost complete. Let's break it down even deeper so it makes sense. If Trump injects trillions into the economy, the ripple effect hits crypto instantly. Liquidity floods risk-on assets first. Bitcoin spikes, Ethereum follows. High utility altcoins, HBAR, XRP, Sol, even XLM explode next. Then the ETF inflows flip from red to green. And here's the dangerous part. Retail buyers will FOMO back in too late at prices they could have grabbed during this exact moment. That's why your emotions feel so unstable right now. The market is doing the same thing it always does before a major run, creating maximum discomfort, because discomfort makes retail sell, and retail selling gives whales the entries they want. Look at the behavior we're seeing. Bitcoin dominance holding strong. Typical pre-rally behavior. Ethereum's long-term support bouncing despite massive pressure. Typical pre-reversal behavior. HBAR showing accumulation signals even as price pulls back. Typical whale permitter behavior. XRP liquidity rising even as price dips. Typical pre-expansion behavior. These aren't the movements of a dying market. These are the movements of a market resetting and preparing. And here's the final truth you need to hear. You do not get generational opportunities in comfortable markets. You only get them in markets that feel terrifying. Markets where every headline screams collapse. Markets where influencers argue. Markets where prices look broken. Markets where fear is loudest. Because in those exact markets, smart money always steps in quietly and aggressively. They don't care about fear. They care about discount. They care about positioning. They care about the next 12 months, not the next 12 hours. And that's how you must think right now too. If we get the liquidity injection Trump hinted at, the entire crypto landscape flips. If we get regulatory clarity, momentum accelerates. If we get ETF inflows returning, volatility becomes upward. If we get macro stabilization, confidence returns instantly. And when all of those align, because history shows they always do, eventually the people who held through this moment will be the ones telling the story later. Not the people who panicked, not the people who sold the bottom. So look at this moment for what it really is: fear screaming while opportunity whispers, and the whisper is getting louder.